Good morning, everyone. I want to thank you all for joining. There are just a few people that haven't logged in. Kathy, we're not going to answer raised hands. If you will do your chat, ask a question through chat, that would be great. We're going to answer questions. If you have a question during the seminar, don't raise your hand. Please put it in the chat feature. I will be monitoring the chat feature. And at the end of each section of the presentation, which each section is about a half an hour, and the speakers are going to talk for 20-25 minutes, and we're going to take the last 5 or 10 minutes to answer the questions that are put in chat. So just so everybody knows me, I'm Karen Mayfield. I'm the Executive Director of the West Florida Chapter, and we are the group that's putting this board certification on today. And I'm very honored to have 3 wonderful speakers who help me out a lot. The first is Curtis Hamlin. He is an attorney with Porges, Hamlin, Knowles & Hawk. And he's going to do statutes and governing documents. And then at the end, he's going to do contracts. And then we have Laura Howe, and she is one of our managers, and she's with the Florida Management Services of the Sun Coast. And she is going to do the section on elections, requirements, and best practices. And then we have David Hochsprung, who is a CPA with Kavanaugh and Company, and he's going to present the financial requirements. So with that being said, again, just in case you logged in and didn't hear me, if you have a question, please don't raise your hand. We're not going to monitor the raised hands. We're going to monitor the chat. So ask your questions via chat. And at the end of each section, we will answer questions. And if we don't have a chance to get to your question at the end of today's seminar, if we have some time left over, we will answer that way. So Curtis, with that being said, I'm going to turn it over to you.
Good morning, everyone. I'm going to lead off our discussion this morning with a review of topic number 1 in our materials, which will cover the governing acts that create or allow the creation of condominiums and cooperatives, touch on some of the operational provisions that are in the governing acts, and also briefly touch on some of the key statutes that you should, as directors, be aware of. As noted in the materials, both condominiums and cooperatives exist in Florida by virtue of the statutes, Chapter 718 for condominiums and Chapter 719 for cooperatives. Those were both created in the early 1970s, although the Condominium Act had a predecessor, Chapter 711, that was existing in 1963. I actually represent a condominium that was created in 1966, so they do go back a ways, and but for those acts, you couldn't have in condominiums vertical construction because the condominium units are literally portions of air, and in the cooperative, many of ours on this side of the state are the result of conversion of mobile home parks, whereas on the East Coast, and there are a few on the West Coast, there are conventional cooperative style buildings that are multi-story buildings. And the cooperative concept is, as you know, members own shares in corporations. Corporation owns the building, and that's the basic distinction between that and a condominium. There's still cooperatives are interest in land, which we'll talk about. You should, as new directors, be familiar with the governing act that addresses your condominium versus your cooperative. And in the condominium context is Chapter 718, and in the cooperative it's 719. Each of those acts, if you look at them, and let me back up just slightly. The division used to print the Condominium Act and the Cooperative Act and hand those out at things such as our CA Day. But with the changes in the statute and the ready availability of all statutes online, they've gotten away from that. And if you haven't already done so, I would encourage you to go to the Florida. If you just do a search for Florida statutes online, you will end up at I like the Florida Senate's website for some reason. It just works better for me. And you can find the statutes and you can go back almost 20 years if you have any interest, but it's updated every time there's a change. The statute gets updated. And there haven't been a lot of changes in 718 or 719 in the last couple of years. I am going to mention one that was adopted in the 2020 legislature and show you how that impacts statutory change impacts your document. So as I note, the Condominium Act is in 7 parts. The ones that you as directors need to be most familiar with are Part 1, which is entitled the General Provisions, and Part 3, which is the rights and obligations of the association. And I'll touch on some of those. When I first did this outline, I had the whole index, but I've since deleted it, and that's still referenced in the materials, but I'm going to clean that up. So when you look in this section, you'll find a definitional section in both of them. And in page 3 of the materials, I've highlighted some of the key definitions, but you should be familiar with 718-103, which is the condominium definitional section, and 719-103, which is the definitional section for cooperative. And the association is perhaps one of the most critical definitions in the statute. And then condominium is described as the form of ownership created pursuant to the chapter, which is comprised of units, and then the definition of unit. And in your governing documents, which for condominiums, we'll talk about those, but in condominium and cooperative, your governing documents are part of your official record of your association. And as board members, you should have a copy of those readily available. And if you don't have them, contact your manager if you're managed association or your association council. But those are parts of the documents that the association is required to maintain under both of the statutes. And you probably don't need all of the amendments to your documents, because when I represent an association, I get all the documents and I call through those. And for instance, in a phased condominium, you might find a document that amends or you will find a document that amends your declaration every time a new building or a new phase is added to your condominium. But those are somewhat formulaic in nature, and I just lay those aside, or I put them in a separate folder in my computer so I know I've got them, but I then keep the what I would call material amendments to readily have access to. And so once you get those, and then I would say go to the Florida statute. And if you don't want to download the entire chapter, which I don't do, I print it because I have a set of the statutes at my desk all the time, and I make notes in mine. But I'm going to point out a couple of sections that if you want to download them so that you can search them as I do, that might make your life a little easier. If in the course of your service as a director, you have questions about, say, reserves, or the budget meeting, or the election meeting, or as David is going to talk about, the financial reporting of your association, or as Laura will mention, the election process. Those are things that you may be asked to have some input on or want to have some general familiarity with. So those sections are good to have knowledge about. One thing in both the condominium context and the cooperative context is the idea of common elements and limited common elements, or common areas and limited common areas in the cooperative context. And why that's important is because people are going to try and do things outside their unit oftentimes that they're not allowed to do. And you as board members need to enforce your documents with respect to what can happen in the common elements, what can happen in the limited common elements. And you need to know where those are in your community. And the way you find that is by looking at the plat for your condominium or the graphics for your cooperative. And again, that's part of your official record. So if you haven't seen the plat of your condominium or the graphics of your cooperative, seek those out through part of your official records and become familiar with those. Examples of common elements are in a condominium would be swimming pools, parking lots, parking garages. You may have a combination of, in a garage concept, you might have a combination of limited common elements and common elements, depending again on whether or not you have assigned parking spaces or not. All those things will come into play as you read through your documents. In both of the sections, I've highlighted a few things that are what I consider the most important provisions in the Act. In the condominium context, the ones that I go to most often, I'm just looking down, are 718.111 that describes the association. And when you get into 111, you'll find that includes insurance, which is 111 sub 11. And then 112, which is the bylaws. And then the way you determine your common expenses and your assessments. I've highlighted in my materials electronic voting. That was first brought into the statutes in 2015, and more communities are going toward electronic voting. And if your association hasn't explored that possibility, you may want to address that with your manager or your council and think about the idea of using electronic voting, because the way the statute is set up, it can be used for anything. Any vote that an association can take can be done through electronic voting. I mentioned there haven't been a lot of amendments to the statute in the last few years. Through CAI, we have what's called the Florida Legislative Alliance, and I happen to be a member of that. I'm a chapter delegate from West Florida. I served as the chair of that in the 2017 and 2018 legislative sessions. And in 2018, we adopted a bill. There has not been a general community association bill adopted in either 2019 or 2020, but there was one section that was adopted last year, and it's called Law Enforcement Vehicles. It was chapter 2020-5, and it's now in each of the governing acts. In the condominium at 718.129, in co-op 719.131. I see your question. There's a question here about master associations, and I'll address that. I'll address that when I get to that part of the discussion about master associations. So what I'm getting at is that even though there hasn't been a wholesale amendment to the statute, there are portions of the statutes that do get amended that will impact your document. And what that law enforcement vehicle was, it was an HOA that fined a deputy sheriff $20,000 for bringing her squad car home and parking it in her driveway. And they tried to claim that it was a commercial vehicle that was prohibited. Well, that got the attention of the chair of the House and every other legislator in the state. That bill passed unanimously through both houses within about the first week of the legislature. So if you read it, it's very specific. It's only law enforcement vehicles of a law enforcement officer, which is a defined term, but your documents cannot prohibit them from being on your property, and they can park them just as they can park any other vehicle. So that's an example of how the statutes, as they evolve, will affect things. So going on, as I said, a few of those are statutes that I would suggest that you become familiar with, because in the context of 718.112 and 719.106 on bylaws, if you read the opening provisions of that, it says that the bylaws will contain or be deemed to contain the following documents, the following provisions. So if your documents haven't been updated in a long time, there may have been, or probably will have been, amendments to the bylaws provisions that will affect your community. So you need to be familiar with that. Under the next section on governing documents, in the condominium context, it's the declaration of condominium, and in the cooperative, it's the master proprietary lease. Those are recorded. As part of the governing documents, you record as exhibits to the declaration or the lease, the articles of incorporation of your association and the bylaws of your association. And there's a separate provision that says an association must be a corporation. So you are also governed by Chapter 617, which I'm going to discuss in my last segment where I talked about contracts. So associations are created under Chapter 617 as not-for-profit corporations almost uniformly, but then they're also governed by these governing acts that I've talked about. And then you have your declaration. And in terms of priority, the statute would take priority over your declaration of condominium. Your articles take priority over your bylaws, and all of those take priority over any rules and regulations that might be adopted. So if you view things as a pyramid, the statutes are at the top, the declaration, the articles, the bylaws at the bottom are your rules and regulations. And there's a general, most every declaration I've seen gives your board the authority to adopt rules and regulations. But there has to be some basis for that. There's a question about electronic voting, and someone has asked, does that replace paper voting? Only if members opt into electronic voting will it replace their paper vote. And that's the way the statute is drafted. It's completely voluntary among the members. You cannot force all your members to vote electronically. They have to opt in and they can opt out. And that's the way the statute is drafted. And that's the way all the programs that I'm familiar with work. So it's encouraging you as board members, if you want to promote electronic voting, it can save you thousands and thousands of dollars in mailing costs. And it's a good way because the people can vote on things at their leisure. They don't have to remember to send a proxy in and all those kinds of things that are complicated. And especially in today's environment where we've gone to electronic meetings to deal with the COVID issues that came up last year. And we're having this seminar electronically. Otherwise, I'd be in a room with all of you and present this to you in person. But electronic voting is certainly the wave of the future, let's say, and it's a good thing to promote. The governing documents can be amended. Oftentimes, you find that you're in an older community, you may want to update your documents to take advantage of changing circumstances, leasing problems or issues, use of common facilities, all those things that the original developer and the developers council had some view of how your community should be created. And I teach a course on amending documents, and I say your declaration was the vision of the community by the developer and his council, and now you, as the current owners, can make the community work for you through the amendment process. So that's it. That's another important thing, is to be familiar with the amendment process of your document. Someone has asked a question: if a person is using their mobile for storage, does it violate residential zoning? If they're using it exclusively as a storage unit, it probably, I'm assuming you're a cooperative, it probably is a violation of your cooperative documents. So that's about as much as I can say. It probably doesn't violate a residential zoning unless they're running a business out of it at the same time. But if they're using it for their personal storage, it's probably still residential. But I wouldn't be surprised if it doesn't violate the provisions of your underlying governing document. That's another thing to remember. Almost every document has a declaration of condominium, and the proprietary leases have provisions on use restrictions. And those are the ones that you as members of your board need to be familiar with. What constitutes a violation of your governing document? And I teach courses on homeowner associations, and almost the biggest problem we have probably is parking. In condominiums, you don't usually have parking issues. Cooperatives, there are limited parking spaces available within the unit, and those issues don't come up nearly as frequently in condominiums or cooperatives. There was a question about multi-condominiums and master declarations. A multi-condominium is a group of condominiums where a single association was created to govern or administer each of those declarations. You don't see those happen very much because declarants like to divide and conquer, so to speak, as they are creating communities. I've got one client that it's 4 identical condominiums. Each building is 8 units for a total of 96 units, and the developer created 4 separate condominiums with 4 separate associations. We merged those associations to create a single association. Then we amended all the declarations to be consistent. So we effectively created what's called a multi-condominium by doing that. So you have a single association that now administers 4 separate condominiums, because while it is legally possible to merge a condominium after it's been created, it's virtually impossible to do it because you have to get 100% consent of everybody. And we know that never happens. So that's an example of what a multi-condominium is. A master declaration is an overlying set of covenants that creates restrictions that apply to all of the land that are made subject to that master declaration. Now, somebody asked a question of whether a master association has to have a website because of the requirement in 718 that certain associations are required to have independent websites. I would say that unless that master association is solely made up of condominiums, then it does not meet the definition of a condominium association. And that's an interpretational, that's in the statute now in the condominiums. That arrives out of a case that was decided back in the 80s, I think. And that the holding of that case was brought over, and it's now into the association. So if you have an association where all the only members, only units that are governed by that association are condominiums, then that master association is probably a condominium, deemed to be a condominium association. And then you got into how many units are in there, and that gets you an application of the requirement of the master of the statute about condominiums. So you as condominium and cooperative, I don't think I've ever seen a cooperative that was subject to a master declaration, but condominiums oftentimes are, because if you have a large piece of property and part of it was developed as a condominium, you have single family, you might have apartments, might have commercial, then those are the classic master declaration components, and that's why you have a master declaration. The cooperative documents generally follow the same format as condominium documents, and so they can be amended. They're operationally the same. At the end of my outline, I've listed some resources, and those include the division and, of course, CAI. And with that, I'll wind up my first part of the presentation.
Does anybody have any other questions for Curtis? If so, please put them in your chat. And while we're waiting on those, I want to say to you all, I've noticed that several of you are logged in by your first name. There's one person logged in with a phone number. There's another person logged in as owner. I cannot send you your certificates if I don't know who you are. And you might want your certificate so that you can show that you satisfied the requirement of the DBPR. In order to change that, what you need to do is click on participants and go to your name on the participant list. And there's a thing by your name that says more. Right click on that and it says rename. And you can type your full name in there for me, please. If you have problems doing that, send me your name via chat and tell me how you're logged in, and I'll make note of that so I know who you are. And so with that, I don't see any more questions for Curtis. Curtis, do you have anything to add, or are there any questions?
I'll be back.
You'll be back at the end. Thanks, Curtis. And with that, Laura, will you turn on your sound and your video?
Got it.
And I'm going to turn it over to you. This is Laura Howe, and she's going to do the elections part. And again, please change your names. And also, please, have your questions in chat. If you have any questions for Laura, I am monitoring, and she's really good about monitoring as well. So with that being said, I'm going to turn it over to you, Laura.
Thank you, Karen. Thank you for coming, everyone. I'm going to be talking to you today about election requirements and best practices. The basis for the requirements, what is it that legally entitles or mandates us to hold elections in the first place? Condos and co-ops are corporations. The bylaws of the association provide for the corporate structure. In a condo, it indicates the title of the officers, specifying the powers, duties, manner of selection and removal, and compensation, if any. I mean, we all know that with community associations, it's a volunteer board, so that really doesn't apply. But if there is no such provision, the board shall be composed of 5 members unless they have 5 or fewer units. In that case, the board shall not consist of fewer than 3 members in condominiums with 5 or fewer units that are not-for-profit corporations. In the absence of provisions to the contrary, the board shall have a president, a secretary, and a treasurer who will perform the duties of such officers customarily performed by officers of corporation. There is additional language for the co-op. In the co-op of more than 10 units, co-owners may not serve as members of the board of directors at the same time unless they own more than 1 unit or unless there aren't enough eligible candidates to fill the vacancies. Who is a member? For condos, an owner is a unit owner. For co-ops, it's a shareholder. The resources for determining election process. We've got, first of all, the governing documents, specifically your bylaws. In condominiums, you have State Statute 718. In co-ops, it's State Statute 719. So you're going to have an election, which is held at your annual meeting. You want to plan ahead. The date and the time is normally going to be defined in the bylaws of the association. If your documents are silent on the issue, the meeting must take place within 45 miles of the property. And special care should be taken to accommodate anyone with a disability, so your location should definitely be ADA compliant. The materials to gather. First, you want to make sure you hire a licensed CAM. Your manager is normally going to have the information that is needed for the materials. What I do, my normal course of action is pull the file from the previous annual meeting, note any changes in the statute, and then determine what needs to be altered, because there's really no need to recreate the wheel every single year. Election monitors. Here's something to think about if you have a contentious association. We all know that everybody should get along, but in reality, that's not always the case. So let's call your two different factions, Hatfields and McCoys. If the Hatfields and McCoys, and you pretty much know who's going to be who, if you know that there's going to be a problem, you may request an election monitor through the state, and that's also known as an ombudsman. The powers and duties of the ombudsman are to monitor and review procedures and disputes concerning the elections or meetings, including but not limited to recommending that the division pursue enforcement action in any manner where there's reasonable cause to believe that election misconduct has occurred, and reviewing secret ballots cast at a vote of the association. Now, to request this, 15% of the total voting interests or 6 unit owners, whichever is greater, can petition the ombudsman to appoint an election monitor to attend the annual meeting. They then appoint a division employee, person or persons specializing in condominium election monitoring, or an attorney licensed to practice in this state as the election monitor. Now, this is not free, so all costs associated with the monitoring process shall be paid by the association. Electronic voting. I'm going to expand a little bit on what Curtis was mentioning. There are companies who specialize in electronic voting. They have the software. They know what the state requirements are. And the best practice would be to hire one of these companies so that you can ensure compliance with the requirements of the statute. If you do choose to go with electronic voting, both statutes, these are identical in language. The association may conduct elections and other unit owner votes through an internet-based online voting system if a unit owner consents in writing to online voting and if the following requirements are met. The association has to provide each unit owner, with a method to authenticate their identity to the online voting system. For elections, a method to transmit an electronic ballot that ensures the secrecy and integrity of each ballot. There has to be a method to confirm at least 14 days before the voting deadline that your computer, your phone, your tablet, whatever electronic device you're using can successfully communicate with the online voting system. So the association has to use an online voting system that's able to authenticate the identity, able to authenticate the validity of each vote to ensure it's not altered in transit, the ability to transmit a receipt to each owner who casts an electronic vote, for elections to the board to permanently separate any authentication or identifying information from the ballot, rendering it impossible to tie an election ballot to a specific owner. Also has to be able to store and keep electronic votes accessible to the election officials for recount if necessary. A unit owner who is voting electronically shall be counted in attendance at the meeting for purposes of determining a quorum. Now, I do know that a lot of associations have a problem obtaining a quorum for their annual meeting. This is a really great way to get, because it only takes a couple minutes to do the voting process with a lot of these software companies. It's a couple minutes. They're more likely to do that than to go to an annual meeting, especially in these times, thinking that they're going to get COVID or something like that. I mean, it is not a bad idea at all. Now, you do have to have a board resolution to do that. So you can't just go and hire this company. The board has to vote on it. They have to adopt a resolution to allow for online voting. The resolution has to provide that they receive notice of the opportunity to vote through an online voting system. They have to opt in, as Curtis said. They can opt out at any time, but once they're opted in, unless they opt out, that's forevermore. Evidence of compliance with a 14-day notice requirement must be made by an affidavit executed by the person providing the notice and filed with the official records. A unit owner's consent to online voting is valid until they opt out, as I said. So a recap, it's available if the voter consents, if the association provides authentication method, they can transmit ballots secretly, separate authentication from the ballot, and able to store for recount. Okay, to establish procedures by board resolution after the 14-day notice, the legal notice process. Florida statutes, Florida Administrative Code provide for those. Now you've got 4 key dates. You've got your 60-day first notice. So how do you count the days? You look at a calendar, you put your finger on the date of your election. Do not count that date. That is day 0. Count the number of days before that date. That's your 60-day notice. Your notice is to include the name and the correct address of the association, the date, time, and place of your annual meeting, the procedure and deadline to be a candidate, and if provided for and authorized, disclose procedure and deadline to consent to electronic voting. Method of delivery. One little word separates condos and co-ops. You deliver them in a condo, mail, deliver, or electronically transmit. In a co-op, it's mail, deliver, or transmit. Your second date is going to be your 40-day deadline, and that's a deadline for submission of the receipt of candidates' intent to run. Now, this must be in writing. The ineligible candidates, no one who's been suspended or removed by the Department of Condominiums, Timeshares, and Mobile Homes, no one who's delinquent more than 90 days in the payment of their assessment, no one who has already served 8 consecutive years. Caveat on this one, 2 of them, unless it's approved by a 2/3 vote of all votes cast, or if there aren't enough candidates, they can serve a 9th year. Also, no individual convicted of a crime that's considered a felony under Florida law. So when do they have to have these in on the 40th day? Any written delivery method is acceptable. They really should send by personal delivery or certified mail if they want a receipt. The receipt is going to be effective when it's received by the association. You can put a time deadline for the 40th day to conform with the office hours. So say the office closes at 5 o'clock, you can put a deadline of 5 o'clock on there. Third date, 35 days prior the receipt of the candidate information sheet. Now this is optional. The candidate does not have to provide an information sheet, but if they do, it has to be an 8.5 by 11 sheet of paper, one-sided, one sheet only. Who prepares it? The candidate prepares that, and the document may not be altered in any way. Also, the association is not responsible for the content of this information sheet. Next date, 14 to 34 days prior. This is going to be your second mailing, your second notice and agenda. It's really important to include instructions in this, because if somebody gets something with an agenda, a ballot, envelopes, everything that goes in there, it's really important to describe how they're to fill this stuff out. Now, is there even going to be an election? If the number of candidates is less than or equal to the number of seats, no. If there is going to be an election, appoint or call an election committee. What goes in this second notice is your agenda, your election material, which would be your ballot, outer envelope, and inner envelope. The ballot's going to list all your candidates in alphabetical order by last name, plus the information sheets if they submitted one. The outer envelope is where the inner envelope is going to be placed and sealed. The outer envelope has a place for the voter's name, unit number, and signature. The inner envelope is where the ballot goes. That's where it's placed, sealed, and then put in the outer envelope. Another thing to include is a proxy. This is going to be necessary in order for there to be a quorum to hold the annual meeting. The proxy is not used for voting. It's only to obtain a quorum for the annual meeting. And if the quorum is not obtained, you don't really have an annual meeting, but you can still hold the election if at least 20% of eligible voters cast the ballot. Opting out of the process. Condos with 10 or fewer units may opt out. More than 10 may not. Co-ops may opt out of statutory voting process by voting a number or percentage into the bylaws by voting to change your bylaws. It takes a vote of the membership to waive or reduce reserves in accordance with subparagraph F2 for votes taken to waive the financial reporting requirements of statute 718.111.13, for votes taken to amend the declaration pursuant to 718.110, for votes taken to amend the articles of incorporation or bylaws pursuant to this section, and for any other matter for which this chapter requires or permits a vote of unit owners. Documentation of the process. You have to have a proof of notice, which is the affidavit of mailing. The property manager can do this, but in larger associations, let's say you have 800 units, you're going to want to send that out to a mailing house because it's too much for, let's say, a two-person office to do. So what I have done in that case is I've had the mail house preparing the mailing, do the affidavit. So because do I really know if they say it was mailed out on the 15th, do I really know that? Well, if I'm filling out the affidavit, guess what? I'm swearing to it. And I don't really know that that particularly happened. So that's why I like to have the mail house do that for us. If any of them were hand delivered, you need a signature on those. Is there a flexibility in the 60, 40, 35, 14 to 34 deadlines? No, not a single flexibility. The only, if you do 14 to 34, that's the flexibility you get, but otherwise, no. Time and date stamped documents, the candidate's intent to run. If you received it in person or by certified mail, you can prepare a receipt for that candidate. The information sheet. This is important. If somebody hands you an information sheet, do not time and date stamp that information sheet. Make a copy. Remember, because this document may not be altered in any way. In other words, if it comes in with a coffee stain on it, that's the way that the owners are going to receive it. It gets copied and mailed with that coffee stain on it because the association may not in any way alter that document. Return of voting material. Okay, so here you are. It's more like a manager thing, but let's say you're an on-site manager. People are bringing stuff into the office. They're mailing it in. what I do is I have a ballot box. You bring that to the meeting. Any ballot that comes in, this as soon as you get it in, put it in that ballot box, because that way, when you go to the annual meeting, which is not going to be at your office, and realized, oh my gosh, today's mail, I didn't pull the ballots from it. Oh my gosh, we're missing ballots now. Not a good thing. If you receive an open envelope, you have to disqualify that ballot. The envelope must be sealed. If you only receive the inner envelope, you can't accept that ballot. You have to disqualify it, because the outer envelope is where the name, unit number, and address of these owners are. You don't know if somebody's voting twice if they only give you an inner envelope. So, okay, now we're at the night of the meeting. You want to bring a sign-in sheet with a roster of votes similar to what you might see at election polls, you know, list all the owners, and then you can have them sign in and check off. The quorum requirement, the total to hold the annual meeting generally is 50% plus one, of course, unless your documents provide otherwise. To hold election, 20%. The election committee cannot consist of current board members, candidates, officers, or their spouses. The election material has to be opened at the annual meeting. The agenda is defined by your bylaws. The election nominations from the floor, if it's allowed for condos and co-ops, then you can take nominations from the floor only if it's allowed in your documents. You do a call for ballots, you close the polls, and then the tellers count the vote. They check the outer envelopes to be sure nobody voted twice. They then open the inner envelopes and tally the ballots. This must be done in sight of those in attendance at the annual meeting. You announce the new board and how many votes you had to disregard. Is runoff election required? Flip a coin. The records of the election are to be kept for 1 year. The ballots, the sign-in sheet, the proxies, the electronic records. Challenges to the election have to be received within 60 days of the election. Vacancies may be filled by the majority of the board. You proceed with the balance of the agenda, and then you adjourn the meeting. Then there is a second meeting after the annual meeting. That is usually known as the organizational meeting. It's the new board of directors meeting, and it's held immediately following the annual meeting. This is a very short meeting. It takes 5-10 minutes for the most part. You have a separate agenda for it. Order of business is that you first elect and appoint your officers, who's going to be president, treasurer, secretary, vice president, if it's allowed, whatever positions are dictated in your bylaws. And let's see, then you appoint the check signers, and then you adjourn the meeting. It's a very short, simple meeting. The new board, certification form or educational seminar. Guess what? That's why you're here. It has to be done within 90 days of the annual meeting. The secretary usually holds these certificates or copies of. Newly elected or re-elected board members who are currently serving and have fulfilled these requirements. The last I know, Curtis, if I am wrong on this, please correct me, but they don't, the last I knew, they don't have to repeat the procedure every time they're re-elected if they have served uninterrupted, but any break in the service resets the clock. Let's say they go off the board for a year.
Yes, that's correct.
Okay,
If
they
you
go
have
off the
continuous service, you don't have to be recertified, but if you take a year off and then you decide you want to run again, you do have to take another certification course. But we recommend that you take a certification course often, just because things change and you get a different perspective depending on who's your presenters. But yes, that's That's in the statutes.
Thank you so much.
Yep.
Appreciate the confirmation. You have to keep this record for 5 years. If you don't comply with that requirement, which all of you are, you're no longer eligible and you have to step down from the board. But if you are non-compliant, it does not nullify any actions of the board. Your meeting schedule is often dictated in your bylaws. With that, do we have questions? Let me look at.
We do have a couple of questions, Laura. One is, and I think what he's trying to say is, can a candidate run for the board via email? And I don't think you can do that, can you? Because you're not allowed to campaign.
I don't think so. Curtis?
I'm not sure what he means by running electronically, because you have certain required documents that have to be returned, such as the notice of intent to run. That's an official document. The candidate information sheet. There's certain things that have to be generated in paper. Now, you may have electronic voting, and once you have indicated that you want to be a candidate, everything from then on from the voting side is done electronically. But there's certain things that just have to be done. And if you're saying you want to file the notice of intent via email, I would say every form I see going out has certain information that you want your candidates to give you, and that has to be filled out. It can be emailed to the manager, I think, once that form's completed, but you can't just jot an email to Laura saying, "Hi, Laura, want to run for the board." I don't think that works.
Okay.
And Curtis, am I wrong? When you do run for a board in your community, are you allowed to campaign as a nominee to the board?
I don't know that there's any prohibition against campaigning.
Okay.
It happens, and some communities will sponsor meet the candidate nights or meetings or Zoom meetings. Now, I had a call yesterday about one of those. So campaigning is not really precluded,
Okay.
and we know what happens. But as Laura said, that information sheet goes out unaltered, and it can only be one sheet as well, and it can't be printed on special paper and all that kind of thing. So.
Okay, we do have a couple other questions. Laura, your outline for annual meeting voting doesn't deal with COVID-19. I read recently that associations can have virtual meetings with the president located in the clubhouse.
I don't see anything wrong. Again, Curtis, correct me if I'm wrong, but I don't see anything wrong with having virtual meetings, having it on Zoom or whatever format you wish to do that. It might even, in my opinion, increase participation in these meetings. But with COVID, yeah, I mean, I see absolutely no reason why you couldn't have a virtual meeting.
There's a provision in Chapter 617 that allows for, it doesn't call them virtual meetings, but it talks about telecommunications. But with what's happened in COVID, a lot of us are beginning to rethink how we describe meeting processes. And for board meetings, you do have to allow member participation. So whatever format is chosen has to allow for member participation, and there has to be a record kept until the minutes are done. I've got one big condo association where you've got very few resident members. They've used GoToMeeting for 10 years or more for their board meetings. But everybody can see everybody, and that's one of the criteria that you have to be able to participate, whether you're physically present in a room or just as we're doing now, participating in a virtual space.
Okay. Next question is, if a candidate withdraws after the second notice was sent with their name on the ballot, the ballots that are brought to the meeting, can I remove the withdrawn candidate's name?
I don't think you'd withdraw their name. You just would tally those votes and ignore them in the count. You don't alter ballots by marking through that person's name or anything like that. You would just recognize that if that person got votes after they withdrew, you just, when you get your tally sheets done, you just don't count them toward the vote.
Okay, the gentleman that asked the question clarified, sorry, my question is, can a candidate send notice of intent to the management company via email or UPS?
Well, I think, as I said, just jotting an email to Laura, if she were your manager saying, I want to run, doesn't work, because the county, the association will have sent out a notice of intent form. But if you complete that form, scan it, take a photograph, however you get it to them, and then you communicate that back to the management company or the manager, that works. The safest way to do it is, a lot of people hand deliver them to the manager if you're a resident on the condominium, or mail them back, but they do have to be received by that cutoff date. That's critical. As Laura said, there's no slack in those dates in the election process.
Right. What happens if the information sheet has more than one page?
They can't. That's very easy. It has to be 8.5 by 11, one-sided, one page only. That's it.
Yeah, I guess if they send a 2-page one, you only print the first page.
Okay.
I suppose.
But that's pretty explicit in the statute as well.
Yes, it is.
Does anybody have any other questions for Laura on elections? Because I think we've answered everything.
Good.
Okay.
Good review of the election process.
Laura, thank you so much for teaching the election section of the program. And
My pleasure.
I'm going to turn it over now to David Hochsprung, our CPA, who's going to talk to us about finances.
I am, and thanks everyone for showing up virtually, and heard a lot of comments about COVID during the first couple sessions, and I'm telling you, one of the areas that was probably most impacted by COVID this past year is the financial reporting for associations, both from a national level and also a compliance level with the state of Florida. And I'm going to touch on that a bit because it's going to have some carryover effects coming into this reporting season as well. But the presentation, just broadly defined, is going to be on financial reports. I'm going to talk mostly about the annual financial statements that need to be prepared or are prepared. I will touch some on interim financial statements, and really for the financial reports, the focus is going to be on what to expect in those, what are the requirements of each of those. I'll also get into some of the accounting rules that associations are impacted by, and there was a huge change that most of you probably saw in your last set of financial statements regarding revenue recognition. And that again is having it was interrupted by COVID, and again is having some spillover effects into this reporting season, 2020. Most of you are in calendar year end, so I'm going to talk mostly about December 2019 and December 2020 and the impacts on these. And then lastly, I'll talk, or last couple sections, one will be on the legal requirement for production and distribution of the reports and what type of report is required. There are different types. And also, if I've got time, I'll just talk briefly about how to deal with your CPA or your financial statement provider. Again, financial reports and Florida associations are in a really unique position in that the accounting rules and requirements are really coming from two different sources. Number one, and I'll use this term from time to time, Common Interest Realty Associations, or CIRA, C-I-R-A acronym. That is an all-encompassing term that includes condo associations, homeowner associations, cooperative associations, and timeshare associations. And From a national perspective, there are national rules established by and called generally accepted accounting principles, which are nationally set by the standard setters, that are addressing financial reporting and disclosure requirements, presentation and disclosure requirements for all those types of entities, all the CERAs. So condos and co-ops are subject to those rules. In addition to those national standards, you're also required by Florida statutes and rules to certain disclosure and presentation and reporting requirements imposed by Florida law. So you really have a combination of both national law, I'll use national law as but it's really national accounting rules, and Florida law. So it's a combination of requirements that you have to meet. And we as CPAs, of course, we're monitoring those for you and helping you comply with those. So it's really, and I've done presentations on this before, where we're taking both the national standards and the Florida standards and meshing them together into an all-encompassing, more or less, checklist to make sure we've got everything covered. Again, I'm going to talk about the financial reports, annual financial reports, and the annual financial reports can be done by any one of three parties, really. A CPA, and that's, of course, the ones that we're most involved with. They can be done by internally. You can prepare your year-end financial reports internally, or by some other contracted party, like your management company. Now, the type of financial report that a CPA is required to, that a CPA is involved with, must be done by a Florida licensed CPA. And it's very important to know that is in the statute. And the idea behind that is to keep, my cousin Vinny from New York just blowing down here and not, theoretically or presumably not knowing much about Florida law, and trying to help Florida associations comply with the various Florida statutes. So again, your annual financial report that a CPA is involved with needs to be done by a Florida licensed CPA. Again, those are done annually. We'll get into those different types of reports in a minute. I'm also, again, like I said, I was going to talk about interim statements, and of course, you need to monitor an association's activity more frequently than annually. Monthly is preferred, and that's what most management companies are providing, and probably internal, but at least on a quarterly basis, an association. It depends on the size and complexity too. That you should be monitoring your activities on at least a quarterly basis. Again, monthly preferred. Now, the interim statements, number one, they are not governed by Florida statutes, so the presentation and disclosure requirements aren't applicable to those. But what I've always said about those financial statements are those should be in a format that helps the board understand the financial transactions and lets them make informed decisions. Not necessarily good decisions, but informed decisions, just so they know what they're seeing and how they should act on those results, financial results. And again, I always stress here two things. Number one, these are your financial statements, even the ones that CPAs are involved with at the end of the year. You may get it and you say, well, I don't like this, that, or the other. Well, tell the CPA about it, because technically they are your financial statements, and we listen, at least our firm does. We listen very intently to what associations are saying about their financial reporting. Again, in my theory, in going into these types of financial statements, I want to answer questions before they're asked. So if there is an unusual transaction or something unusual happened during the year, I want to disclose it to make sure that I'm answering everything that comes up, that may come up. So again, they are your financial statements. Both your interim statements and your annual financial statements are yours. And you need to take ownership of them because, again, that's under the accounting rules. They're not our financial statements. Another point I like to make about financial reporting, both interim and year-end, again, when you're having interim and year-end financial statements done by a CPA, of course, there's a little transition of information, And one thing I try to stress is that there should be a clear line from your budget to your interim financial statements to your year-end financial statements in terms of account classifications, groupings, presentation, things like that. It always helps an awful lot to make sure that someone can follow the budget all the way to the year-end financial statements. And really, you should go as far as the reserve information too, because there are some requirements to have reserve information disclosed in financial statements. So again, I just encourage everyone to have your reserve study match your budget, match your internal financial statements, which then matches your annual financial statements. Just we really like to see that consistency through the financial reporting. You'll see in there the specific Florida statutes and Florida Administrative Code. Again, Florida statutes exist and enacted by statute, of course, but that's law. The Florida Administrative Code was established to help interpret the law. And they're very helpful sections that expand on certain items and help explain the law. So really, there are two types of financial statements that are come into play at the end of the year. A cash receipts and disbursements report, and the CPA prepared or full financial statement with financial statement disclosures and footnotes and very lots of pages to it. And these are both required. Again, annually you have to prepare these, one or the other of these, or you can do both, but I can't imagine why. But the cash receipts and disbursements report, it's a basic report, and just pretty much as it says, it just displays the cash receipts and disbursements of the association. You see the required classifications there. And again, just communicating, those are the minimums that need to be there. The one thing that is often missed in these cash receipts and disbursements report is some additional information that is required by statute. And it's indicated there, additional information on reserves, special assessments, and limited common elements. And there's a lot of information that is required for reserves. And this will also spill over to the annual financial statements as well. Again, I'll just go through these quickly, but for condominium and cooperative associations, the following reserve disclosures shall be made regardless of whether reserves have been waived for the fiscal period. So even if you waive reserves, you have to identify these items in both your cash receipts and disbursements report and your annual year-end report. So if you don't even have reserves, but are required to have them, if you do, again, going back to the budgeting statutes and requirements, if you have items for which you need to reserve, they need to be in your budget. So those same items would need to appear in your financial reports. And again, a beginning balance, any amount of additions from assessments or interest, any amounts expended or removed from expenditures for purchases or transfers, and the ending balance in each reserve account. The annual funding requirement to fully fund each reserve account, now that's for condo only. The manner in which reserves were calculated, what happens with interest, whether they were waived during the year, and on and on. So there are some very important disclosures required even for your cash receipts and disbursements report. And again, as we move forward to the full financial statements, we'll see these same things. Also, the specific purpose for any special assessments needs to be disclosed, and the disposition of those funds. And then there's some additional information for limited common elements that would be required. So that's the cash receipts and disbursements report. The report that is prepared, with the CPA involved, more formal, and there are more formal presentation and reporting requirements for that. Number one, it has to be on accrual basis. So the other one was cash basis. This one is now on accrual basis, meaning that any type of unspent, or uncollected receivables or assessments need to be presented on the balance sheet. Any unpaid bills need to be presented on the balance sheet as a liability. It needs to be under the funds format. And typically what we see, what funds format means is that you're really grouping common transactions into a fund. And most times it's shown in a columnar format. And most associations are going to have at least two funds. They're going to have an operating fund and a reserve or a replacement fund. So you typically see those types of funds on both the balance sheet, the income statement, not necessarily the cash flow statement, and jumping ahead a bit, but you'll typically see those types of funds. Now, you're not limited to those types of funds either. And then this is where you can actually have a voice in how your financial statements are being prepared. If you have a significant special assessment during the year and you want to have accountability for that special assessment, you can have that special assessment set up in a separate fund apart from the operating and reserve funds. So again, you're showing the accountability, the assessments received, the receivables due on it, the payables related to it, and the income and expenditures related to that special assessment. We've seen other funds set up for property and equipment. Co-ops have a large investment in property and equipment. Some condo associations also do. Sometimes they want to separate any type of net equity, if you will, of those items into a separate fund. And we've seen property and equipment funds, insurance funds. We've also seen funds set up for making insurance payments or deductibles or anything like that. So again, you have some flexibility in your financial reporting and presentation relative to the funds. Again, the full set of financial statements will include an accountant's report. We'll get into those in a minute. We will also, and the requirements for those, again, it's going to have the basic financial statements, notes to the financial statements, or I'll call them footnotes also, a few pages of narrative description of various things related to the association and the accounting aspects. And also, there is normally supplementary information. And again, you have flexibility in the amount of supplementary information that you can have. There is some amount of required supplementary information. Again, this is a national standard. There is some required supplementary information for information on replacement items. So every financial statement that with an association that has reserves or is responsible for repair replacement, long-term repair replacement, they should have some information on those items. And again, even if you're not funding them, it needs to be there. So the basic financial statements, the balance sheet, and the balance sheet is basically a snapshot of the association's assets and liabilities as of a certain point in time. Again, it's normally on a columnar basis of operating reserve and whatever funds you may have. Typically, a total will be presented also, those columns. And oftentimes now you see a comparative in total to the prior year. And on the balance sheet, the typical assets and liabilities, cash, assessments receivable. Now, on an accrual basis, any type of assessment receivable needs to be considered for collectability. So if there are some assessments that you don't believe you're going to collect, those need to be, on accrual basis, those need to be brought down to the amount that you actually do believe you're going to collect. And the way that is done is through an allowance account. It's not necessarily written off directly. You can have it's called a contra asset account, or kind of like a negative asset account that would bring that receivable down to a net realizable value. As an example, let's say you've got one assessment or assessments receivable $10,000, and you're not going to collect $2,000 of that. Well, you should still have on your balance sheet assessments receivable of $10,000, but directly below that, you should have something called an allowance for uncollectible accounts of $2,000, bringing that down to the net realizable value of $8,000. So again, on accrual basis, when there are estimated uncollectible assessments, they need to be presented net of that allowance account. One thing unusual with co-ops is that you're going to see long-term property and equipment, because again, a co-op, the entire park, and like Curtis said earlier, most of these are through mobile home park conversions. The entire park is going to be on the balance sheet as an asset. So you typically do see that. And it makes some interesting financial statement presentation issues too, as we get a little further down. Now going to liabilities next. Typical liabilities are going to be accounts payable, accrued expenses, and that would be like payroll that hasn't been paid. So it's not really a payable, it's accrued. at the end of the year. Prepaid assessments or deferred revenue, so any amount of assessments that you collect for next year are not recognized as revenue right now. They are put in a deferral account, deferred revenue account, a deferral account until the next year when that does come into revenue. Some associations also have long-term debt, and that's kind of presented differently and can also be presented in a separate column as well to keep that debt. But I've seen there's been a few associations now that are financing certain long-term projects, and it really causes some challenges in both financial reporting and budgeting, and also for reserves. Because if you're financing a reserve project and then you have to include that reserve item in your next year's budget, well, you also have to include the principal payments for the payment of the debt. So a lot of times when you have these projects, long-term debt, you may be providing for or having to pay for or budget for the same item twice. The payment of the thing that happened before, and now the future payment of the item that you'll have to replace down the road. So it's, again, it can cause some challenges when budgeting. Fund balance, and fund balance is just basically the difference between those two, assets and liabilities, essentially the net worth of the association. One comment, again, well, before I leave liabilities, maybe I'll come back to that when I hit revenues, but fund balances, again, it's going to be on columnar basis, operating fund, replacement fund. And the unique thing about cooperative associations, again, because all of their assets are capitalized on the books and being depreciated, pretty much every cooperative association is going to operate at a loss from an operating standpoint, because you're taking that depreciation expense of the capitalized assets, and it's a big number most of the time, and it's affecting the income statement. So you got to be careful when you're looking at an income statement for a co-op, because again, for GAAP purposes, we have to show that depreciation for real accounting purposes. Again, it's a non-cash item, but it does impact the bottom line and will impact the retained earnings or fund balance. So you have to consider that there may be some non-cash losses and non-cash items that you really have to worry about. The big thing I want to talk about, and I mentioned this earlier, there's a huge change, and you've probably lived through it a bit already from 2019, but again, it was significantly impacted by COVID from a couple of standpoints, is revenue recognition. And if you had financial statements done last year with revenue recognition change in it, again, the terms being thrown out there, it's an accounting rule, and it's called 606. That's the name of the standard, if you will. But the significant change on revenue recognition that started last year, was effective last year, is that replacement fund revenue, reserve and replacement fund revenue prior to 2019 was being recognized generally across the board. I didn't see any exceptions to this, was being recognized when it was assessed. So if you have reserve assessments of $50,000 that you budgeted and assessed, you would have revenue in your replacement fund of $50,000. Very simple, very easy to track, very easy to understand. And then you'd also have some supplementary schedules which would support that number as well. The new revenue recognition standard changed everything and put it upside down. The requirement now is that revenue from replacement funds is only recognized to the extent of expenditures made related to those assessments. So in my previous example, $50,000 was revenue recognized or assessments made. If you expended $30,000 and only spent $30,000, your revenue would be $30,000. That remaining $20,000 would be considered deferred revenue, if you will, or the terms of the standard are called contract liability. So it's caused a significant flip-flop in how revenue is recognized in an association in reserves. Getting a little harder to understand. A lot of CPAs we're working through different scenarios and different issues that we were facing. Now, the interesting thing that happened during this past year, again with calendar year 2019 financial statements, is a couple things. First of all, executive order came from the state that deferred the financial statement production of financial statements for a while. Secondly, the standard setting body that adopted or required 606, the Financial Accounting Standards Board, deferred the application of 606 or this new revenue recognition for a year for those entities that hadn't issued financial statements. Now that was done on May 20th. And I'm telling you, many of the December year ends were not issued by May 20th. So some of those associations that hadn't issued didn't necessarily have to adopt that new standard. I actually had one that was very complicated, and they just said, no, let's just put that off until next year. So I'm thinking most associations adopted it, some may not. So you may have some transitional issues there. I want to go through this, the rest of this fairly quickly. Statement, again, components of the financial statement is the balance sheet I mentioned and what's there. Statement of revenues and expenses, again, just the presentation of revenues and expenses. Normally there's a statement of changes in fund balance, just showing the activity in the beginning to ending reconciliation of your fund balance. Two things may impact this, or three things actually. Number one, your overall net income. Number two, any type of real transfers between operating funds and reserve funds. If you have excess operating funds, want to transfer to reserve, that would be shown as a transfer in that statement. And one unique thing about cooperatives is that the purchase of property and equipment is going to result in a transfer, normally from reserves over to operating, because that's where normally the assets are being housed, if you will, or accounted for. So on a co-op, you're going to see a transfer over of capital assets. Statement of cash flows just takes the accrual basis accounting to a cash basis accounting, more or less. And this is important for a cooperative because this is where you'll see that adjustment for depreciation that I talked about, that it's a non-cash item, so you can really see what your operations are. Notes to financial statements, just a lot of description about the accounting policies and different things on property and equipment, income taxes. There are some very lengthy required disclosures on reserves that I mentioned earlier with the cash receipts and disbursements report. Supplementary information, again, you've got flexibility in this where you can have detailed schedule of operating expenses, detailed schedule of reserve activity. Required supplementary information, again, that is the information that is required by the national standard, which basically requires you to identify each of your reserve items that you have to reserve for, along with an estimated replacement cost and also the life of that item. So I want to move back to the legal requirements, and this is what changed also a bit, and the impact of 606 is going to have a significant impact on these reporting requirements. So legal requirements, and I think it's on page 20 of your materials, again, and it's very similar to condos and co-ops, but the level of reporting, that means whether a CPA is involved, cash receipts and disbursements report, and then what type of report a CPA has to report on, and it's either a compilation, review, or audit. Compilation, we're just basically taking your information, putting it in a financial statement format. Review is a little more detailed. We start asking questions and get some supplementary information. And the audit is, of course, is the highest level. The requirements are there: 150,000 to 300 for compilation, 300 to 500 for review, 500 plus for an audit. Now, and that's based on the revenue levels. And what I'm saying then is because the revenue recognition and reserves, and that includes reserves. So the revenue recognition and reserves has kind of turned this upside down. It was real easy to predict before what you had in terms of financial reporting requirements. The 606 now, it all depends on how much you're spending in reserves. So it's, again, adding a bit of complexity to the type of financial report that you need to prepare. Again, membership can vote these requirements down. Distribution report, just hit on that quickly. The distribution of the report needs to be done, I'll just say no later than 120 days. By 90 days, you have to complete or contract to complete the preparation of the financial statements. Within 21 days of completion, you have to distribute or make notification of it. And then the drop dead date is 120 days after your end. I think that I'm about at my time, so if there are any questions, I can take them.
There is one question, and I don't know if you answered it or not, Dave, but should a cash flow statement be a standard financial statement in addition to an income and balance? Well, I just had an email pop through, sorry, and balance sheet.
Yeah, a cash flow statement is a required statement anytime there is an income statement.
Something happened to your audio. Say that again.
A cash flow statement is required anytime there is an income statement. So every financial statement is going to have a cash flow statement.
Okay, yeah, your audio, something's weird with it. You're echoing. You sound like Darth Vader. I don't know what happened. So, okay, well, does anybody have any other questions for David? All right. David, thank you so much for presenting the financial portion of the program. I greatly appreciate it. And I just need to make one statement to the group. Managers, any managers that are on here, this was not publicized as a manager CEU course today. It was only publicized as a board member board certification. It is not approved yet for online. It is approved for classroom, but it is not approved by the DBPR yet for online. So we're working on that, and hopefully the next time it will be a manager CEU as well. But today it is not, just so you know. Hopefully the managers are on here. Any of the managers that are on here for informational purposes only. And with that being said, I'm going to turn it back over to Curtis, who's going to finish up with, is it contracts, I think, Curtis? Yeah, contracts.
Yes. Yeah, this is topic number 4 in your materials beginning on page 22. And we're going to cover several things here, including some interactions of chapter 617, which I mentioned earlier in connection with statutes that you need to be familiar with. The basic idea of the provisions that I've cited are that your contracts need to be in writing. Almost invariably they will be, because your vendors will want to have a written record as well. But if a contract cannot be performed within 1 year, or it has to be competitively bid. And also if a contract, for regardless of the term, if a contract is going to exceed 5% of your operating budget, and this applies to both condos and co-ops. I'll talk about a distinction between cooperatives and condos on the next page. It has to be competitively bid. But there's nothing, you don't have to accept the lowest bid. And everybody thinks competitive bids means 3, but there's nothing in the statute that says it has to be 3 bids. If you only want to accept 2 bids or solicit 2 bids, and you solicit bids and you only get 2 responses, that's adequate. You've competitively bid the item. One thing that I would point out, and this is consistent between the two, There's certain contracts that are exempt from competitive bidding, and that includes contracts with employees of the association, the contracts for attorney, accountant, architect, community association manager, time sharing, insurance for engineering, and landscape architect services. Now, in condominiums and in co-ops, your landscape maintenance is a large part of your budget, probably second only to your insurance budget. And that contract probably does exceed 5% of your budget. So you do need to competitively bid those contracts. One other thing that I would mention here, and it carries over from the earlier discussion, the contracts that are entered into are part of the official records. And there is, it says bids have to be, that are received have to be retained. Part of what we're doing under CAI FLA is getting a clarification that bids that you receive during this competitive bidding process only have to be retained for 1 year after the bid is received. Currently, though, they have to be retained for 7 years because there's no carve out for the bid out of the general requirement that your official records be maintained and retained for 7 years. So we're hopeful that that's been in our proposed bill the last couple of years, but as I mentioned, nothing has passed. So we're still with the current requirement that bids are part of your official records for up for 7 years. There is an exception for obtaining services in an emergency. And primarily, there's a question of it, if landscaping contracts need to be competitively bid of over 5%. Yes, the exemption was for landscape architect services, not general landscaping. Landscape architects are a licensed profession that if you wanted to have a new landscaped entrance designed, then you would go get a landscape architect. But the company that comes in every week and mows your grass and trims your shrubbery, that's a landscape maintenance company. And yes, if that amount exceeds 5% of your budget, which it almost certainly does, that's a competitively bid requirement. Trying to make a distinction for that. There's also a provision that if a service is an only source of supply for that service, then you don't have to competitively bid that contract. I don't think I've ever run into anything that had a sole source of supply that that a condominium or a cooperative needed. Maybe I'm just led a sheltered existence, but I don't think so. One other thing that there are opt-out provisions, which I don't think we see exercised very often in the condominium context. It's a condominium with 10 or fewer units can opt out of the competitive bid requirements if 2/3 of the unit owners vote to do so. In cooperatives, though, that's 100 units or less if there's an opt-out. And again, most cooperatives, a lot of cooperatives are way more than 100 units, so there are very limited opportunities for opting out of the competitive bidding. One thing, though, I mentioned for co-op owners only is that there's a section in 719 under the bidding that says a contract executed before January 1 of 1992 and any renewal thereof is not subject to competitive bidding. Well, those are probably very few of those left around. But also it goes on to say that if a contract was awarded under competitive bids, any renewal of that contract is not subject to competitive bids if the contract contains a provision that allows the board to cancel the contract on 30 days notice. And then there's some things about voting. I'm not here to give you advice on how to structure your contracts, but my general thought of contracts for communities is to let either side opt out of the contract on a relatively short period of notice. And 30 days or 60 days for management contracts is not an unreasonably short period of time. And when I review contracts for associations, I try and give them that flexibility so that if you decide your landscape service is just not working out, you don't want to have to go through a 4 cause termination or something like that. So it's just something that I think most association counsel that I know of have a similar feel, that we want to have let our associations have as much flexibility as possible to deal with these services. One thing we're going to talk now, move on about your duty as directors to the corporation. And this begins at it's part 3 of the outline. It's a fiduciary duty that you own, and that brings in the discussion of Chapter 617. And it says, you will discharge your duty in good faith with the care of an ordinarily prudent person in a like position would exercise, and in a manner that he or she reasonably believes to be in the best interest of the corporation. So that's the guiding light, so to speak, of how you should view the way you are going to look at contracts for your association or take any action. Is the prudent person, back when I was in law school, it was the prudent man, but now we're prudent people. So that's what's in the statute. And also it has an exclusion that actions taken as a director, any failure to take an action is not, you're not liable if you have performed your duties consistent with that statute. There are also some sections in the Condominium Act and the Cooperative Act that bring this idea over to that. And in 718-111, subsection 1A, it says the officers and directors of the association have a fiduciary duty to the unit owners. And that's a pretty basic concept. You can't act in your own self-interest. You can't accept goods and services that, as a bonus for being a director. But you can, as we've highlighted there, you can go to trade fairs and accept things of value, things at a trade fair or an educational program. And at CA Day, we like you to stop by our booths and say hello, and we always have something you can take home with you. One thing I will point out, and it's at the top of page 25. Sorry, hit the wrong button. In 2018, there were some amendments to the Condominium Act, and these frankly are not carried over to the Cooperative Act. And if you look at page 25 of the outline, there are provisions that talk about, in its subsection D, that there are certain aspects, certain things listed there that they don't create new criminal acts, but they reinforce the idea that certain activities constitute criminal acts. And this all grew out of a report of the Miami-Dade grand jury in 2017 that became, got engrafted into Chapter 718. And they didn't bring it over to 719 for co-ops. It's only in the Condominium Act. And this got everybody all excited, but really, if you read through there, forging ballots, embezzlement of funds, things of that nature, those are bad acts. They're already criminal, so it's not criminalizing your acts. It was already in there. There's a section we're going to talk about now on contracts with directors or officers. And I'm sorry, hit that darn button again. We're going to talk about the exceptions here, but as a general rule, if you are a director of the association and you have a business that could do work with the association, I would strongly advise you not to try and contract with your own association. There are plenty of other associations that you can go and get business from, but don't put yourself at risk, and don't put your other fellow directors at risk to try and provide services to your own association. But with that said, we'll look at the requirements, and these are similar for cooperatives as well. But they do, if you're in that situation, you have to make a full disclosure of your interest in the business that's going to contract with the association, and there are votes that have to be taken. They can be terminated by the members at a subsequent meeting. And so I don't think we'll dwell on those in great detail because, like I said, life's too short to put yourself at risk or put your association at risk. So if you are a separate business person, just go do business with other associations where you don't have to make that disclosure. But I leave that for you there. There's a similar conflict of interest provision in the Not-for-Profit Corporation Act, and it requires disclosure of your involvement in the contract. It also requires that you not vote on any approval of a contract of that nature, and that's in the Condominium Act as well. I'm going to move on to emergency powers. Many of you were, I'm assuming none of you were directors when the COVID-19 crisis emerged or erupted earlier this year. But the emergency powers acts that are in the two governing statutes and are also in Chapter 720 were drafted in the mid-2000s after the state was ravaged by, I think, 8 or 9 hurricanes in a 2-year period. And so before then, the Emergency Powers Acts really hadn't existed. But they were really drafted to deal with damage to the physical property of the condominium or the cooperative. And now with COVID, we see emergencies arising from the virus and from medical emergencies. And so there was an executive order issued by the division that, in a twisted way, said that the emergency powers that are in the statutes now also apply to this medical emergency. And I will tell you that that this is being addressed in the 2021 legislative session, that the bill, the Community Association bill that's being considered contains language that deals with the emergency powers that are necessary for you to do things like close off the common facilities, restrict access to your condominium and co-op buildings, require that certain activities take place in your cooperative, have remote meetings, have telecommunication meetings, although that's something that's becoming more and more common. But that's the way that the Emergency Powers Acts were created, because frankly, we didn't ever envision back in the 2000s that we'd have something like COVID. But that's all going to be addressed, and we have confidence that that's going to be included. There's also one thing, and I'll touch on it very briefly because it's sort of beyond the scope of this, but there is a COVID liability bill that has already been filed. It's to shield businesses from COVID liability. And the president of FLA, Mike Bender, who's an attorney on the East Coast, as a result of the activity of our lobbyist, was on this statewide commission, and built into that is the definition of business entity is the idea that any not-for-profit corporation in Florida is a business entity. And as I mentioned in my first part of the presentation, almost every association is a not-for-profit corporation. And so we think this is going to pass because it has strong support across the spectrum in both the House and the Senate. And so it's going to be a broad shield of liability effectively. And your condominium association is going to be treated just like Publix, or just like Walgreens, or just like Walmart from the standpoint of potential claims that are made against associations because, you know, somebody used the swimming pool or somebody used the gym. You can't be cavalier about it if it comes up again and there's certain requirements, but, you know, we're all going to be on a level playing field from that standpoint. So I hope that'll give associations some comfort. Why my cameras keep going out? We have a subsection on dealing with your contracts with your community association managers. That's in section 6 of our outline. And there's a specific section in the Condominium Act and the Cooperative Act that deals, no, it's only in the Condo Act about the requirements for CAM contracts, and that's 718-3025. Again, you don't need to be that familiar with this act, but if you're thinking of changing your manager, if you are a managed association, or you are seeking to become a managed association, that provision will apply, and your association council will look at the contract to be sure that it complies. Every management company we deal with, they know what the statute says, so we don't ever have many concerns about that type of provision. One thing, if you are a relatively new association in terms of turnover from your developer, there are provisions that will allow the association to terminate certain contracts entered into by the developer, but it requires a consent of the owners at a meeting. And but again, many of the contracts that you'll find have unilateral termination clauses, so you don't have to go through all the brain damage of having members meetings and those kinds of things. But if you do find a developer oriented contract that was that can be terminated, you will have to take that vote. But again, if you're an older community that's been turned over for a number of years, that doesn't apply to you at all. There's similar language in 719-302 applicable to co-ops. I've been doing this work steadily for the last 25 years. I've never handled a co-op transition. So that statute is long past. There may still be some co-ops that haven't turned over, but by and large, those are a long time gone. I want to close with two things. One is construction contracts. That's another statute, Chapter 713. Any contract for $2,500 or more for the improvement of real property is subject to the construction lien law, and it has to have certain disclosures. And again, if you are repainting your building, re-roofing, replacing common area, anything of that length, it has to do with the construction lien law. And in the last part, I do talk about a few of the official records. And again, those are things that if you're an ongoing association, you as a new board member shouldn't have to be too concerned about, because that should have all been in place, frankly, from the day your association was turned over by the association, by the developer. Because not only is there certain things that have to be given at turnover, but the official record statute would have been in play the whole time. But again, I've highlighted the management agreement, contracts for work. And then there's that thing I mentioned under D, bids for work to be performed are considered personal record, official records. But as I mentioned, we're trying to get the bid concept of that limited to 1 year. And so with that, I'm going to conclude. I hope you've enjoyed the program this morning. Thank you again for volunteering to be a director for your association. I fully understand it's a thankless job, but we do thank you for stepping up, and we hope you'll, if you're not a member of CAI, and I know Karen will talk about this, we hope you will be a member of CAI, because I think we give you a lot of benefits. With that,
And does anybody have any additional questions for Curtis? If you do, would you put them in the chat right now? And yes, if you are not a member of CAI, we do a lot of sessions like this throughout the year, a lot of different topics. We have a education committee that's made up of different members, Curtis being one of them, Laura. And Laura chairs it for us. So, and a lot of other people who are really dedicated to providing good education for our board members, our managers, and even our business partners. We do a lot of education with our business partners so that they can be better vendors for you. So if you're not a member and you want some information, please send me an email. I sent everybody an email with my email address yesterday to connect. I've had several questions about the paper copy of the meeting. I sent the handout yesterday in the email that had the Zoom link. It's a PDF of this presentation, the outline of this presentation. We also did record this presentation, and I will have our marketing person get it up on our website if you want to go back and and review it or listen to it again. So with that, I'm going to conclude because I don't see any other questions to the session here.
If
you
don't have ready access to a printer, if one of you would drop an email over to Karen or send me one, I think my contact information is in the materials. I'll be happy to mail you a copy of the presentation, since I helped create it and I help maintain it for the
and you revise it for us
CAI.
so
Yeah,
often.
I'll be happy to mail it.
Yeah, if you do need a copy mailed to you, it is a pretty big copy.
Well,
So,
it's 25 pages, 30 pages, but my printer, we have printers that can do that in about 30 seconds. So it's no big
Sounds
deal
good.
for us.
we don't, so.
I understand. That's why I made the offer.
All right, with that, I'm going to conclude the session. There is a fee to joining CAI Lee, and if you would like, I will have our membership person talk to you, because for board members, it's extremely inexpensive.
And well worth it.
Yes. All right. Thank you, everyone. I greatly appreciate it. Have a good day and a happy Wednesday.
Thank you. Glad I could help.
Thank you, Curtis, and to all our speakers. Thank you.